Great morning, everyone. Since we're about to have tomorrow Nvidia's earnings, I've been asked multiple times to talk about Nvidia. I'm not a big fan of trading the earnings, especially if you're not pre-prepared and sort of, starting to think about it in the last second, unless you were pre-prepared, I would say weeks in advance, and you have the right liquidity to be able to perform your intended, and more so if you make sure you have the endurance to be able to go through the process if things are not going as planned, or the ability to execute and get out early. Of course, depending on your plan, this video is mainly for the traders, but also for people who just want to know my thoughts about Nvidia in general. Sweet and to the point, I think Nvidia is going to drop on earnings. Now, I can speculate to why. There's of course a lot of major analysts, senior analysts in the industry who are talking about their reasoning for it. I think them talking about it amplifies the potential effect of it. Those who've been following the videos know that I expect the S&P and the major indices to go for a deeper correction in the upcoming days and potentially weeks and months and even further out, even if it's not going to be straightforward all the way down just in a straight line. That's not how things work in the market. Those who follow know better. Who don't, I highly recommend watching my previous lives and videos that will help you out understand kind of how I look at things. We're about 3 hours away from market open right now. As you can see, we're dashing roughly the same areas where the market closed. As you can see, we closed at 5,616 with the slight discrepancy of the continuous contract. We might as well say we're roughly at the same prices right now. But again, 3 hours to go. I'm not gonna dwell on the S&P since I've explained this and have been making these lives pretty much every day. Let's switch to the to Nvidia. This is basically my assessment. It's roughly about in the 30% range movement downwards to that golden pocket of the previous cycle of Nvidia, which started at around 2008, if you will. No, 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 no. Now, so 1 hour, it's kind of indicative of a movement upwards. Remember, if we look at the 1 minute, for example, you can see that we haven't really done in pre and post market and pre-market all that much, kind of flat. So potentially what we see here on the hour can come through in the movement towards that 128.80. It shouldn't take all too long. That movement will be potentially, well, highly affected by the market open, by the knee-jerk reaction we're going to have in the first 30 minutes of the market overall. Potentially, we might see some more volatile action or not at all. Nvidia might be actually pretty flat until tomorrow, and only tomorrow it's going to wake up. 1 hour doesn't really matter all in all. Even if we're going to just look at this one, the structure right now, we can recognize that all it's going to do is bring up to that 128 area, probably of course slide slightly above, potentially doing 130 being a round number, not gonna surprise me. 4 hours is a lot more interesting. Now we're already in bearish, basically in a bearish momentum. We are moving towards convergence here. Some would argue that is indicative of bullish momentum. I would argue that it is not. We can dwell in this oversold territory for a very long period of time and basically diverge back and forth many times. Now, my argument is more towards the day, starts more at the daily. At the daily, we're already starting to see the structure towards the downside. The bears are on top, meaning we're already having bearish momentum being dominant, and we're already positioned to the downside. Doesn't mean it's going to be straightforward. Potentially, we're going to have convergence, divergence somewhere around the mid area, as we usually do, a bit of a breather, and continue downwards, which I expect to happen roughly around that 78.60 area, which is $110 right now. More so, I expect more people to capitulate. Oftentimes, people like to talk about the benefits of splits, but there are shortcomings, there are downsides. These shortcomings come in the form of when the market moves down. Your ROI basically decreases significantly in a very rapid movement, and people are not great at enduring their ROI shrinking very rapidly, more so without understanding or having the justified reasoning for it. My assessment, of course, is because the expectation for the earnings, the outlook is so high that it's going to be almost impossible for them to beat for the third time around. More so under the conditions and the outlook forward, and just I would say economic conditions looking forward with the outcome of with the potential outcome of the elections and potential recession and everything we spoke about. It's something that will spill over onto all assets, including the tech sector. Of course, there's a lot of conversation about how AI is overrated and misunderstood by the overall public, and it is basically at least a decade away, if not more so, to actually showing actual signs of valuable application, not something that is just, replacing low-level coders and low-level media people. Something that is actually in the scheme of being a personal assistant, and further out being actually able to help us out with our day-to-day tasks in life. Okay, so that's kind of what people are talking about, that, but I'm not here to speculate about that. Here we want to talk about the technical analysis, as we already spoke about in the S&P, very similarly. So these waves are structured in these sort of ways. It's not necessarily straightforward. It doesn't just, as most people think or assume, it just goes up and down. It doesn't. In fact, we're building up here a structure to the downside. More so, we have confirmation of that to the daily. Basically, if you're going to see the daily move throughout the upcoming days until the end of the week and potentially the beginning of next week to the downside, that will spill over to our weekly chart, and we're going to see here again convergence and divergence to the downside, potentially hinting to giving dominance to the bearish momentum, and of course giving potential to a further movement to the downside. So here, this is the more interesting chart because the monthly actually allows us to look further out than the weekly charts. Pardon me for that. Then the weekly chart, pardon me for that again. Then the weekly chart and actually allows us to perceive a movement that is several months out. Right here, we're already starting to see that the bears are dominant and positioning. The momentum is being positioned towards a movement to the downside. That movement to the downside can be very severe because it's gonna take over. It's gonna be happening over a period of several months, 2 to 3 to 4 months potentially, from the structure that I'm seeing here, potentially even further. But let's currently talk about potentially 4 months, in the area of 4 months. Now, if we're going to have a movement of 4 months downwards, I expect the market actually to slide below that 87 dollar support that we have here, 87.04. I do expect it to slide below, but currently my assessment from what I'm seeing on the technicals is basically a movement from the current range into that range, giving us about 30% retracement. And I'm being rather generous because, as I said, I expect the market to actually retrace slightly. Well, that's going to be the wrong way around. I expect the market to retrace roughly about, we can call it about 33% potentially. I definitely can recognize there's a form of a secondary support and resistance that is right below that 6180. In other words, it can actually exceed the 30%. That is for the near-term future. It is also tied in very neatly with what I'm expecting to see on the major indices, which is a significant movement to the downside. If it's, again, it's not surprising if the structures are correlated, because these major assets are highly affected by the structure of the indices. So that's kind of all. That's all I had to say about that. I highly recommend avoiding trading on earning calls, because these can end up being very volatile, and most people are not emotionally stable enough and fortified to go through these processes. More so if your plan is to hold for long term and you see the the potential price over the horizon. So I would highly recommend considering keeping some dry powder, or I shouldn't recommend. At the end of the day, nothing here is financial advice, but I would, if I was in your shoes, I would probably be saving up some dry powder, and DCAing into it once I recognize that the timing is right. At the end of the day, all of this is up to you. I'm just giving you my personal humble opinion. I appreciate your time, ladies and gents. You have a wonderful trading day and wonderful rest of the trading week. And yeah, I'll see you on the live call later today. Peace out.